Here we're positive on the S&P, the Dow, and the Nasdaq, but we do have the 30-year, Josh, on the move again. We passed this big bill, at least in the House. The bond market continues to scream, perhaps, about the deficit. Not that we expected the House to listen. We'll see what the Senate does and how big of an issue this becomes. 515 was the high touched on the 30-year, highest since October 23. 10 years on the move today as well. Jonathan Krinsky says the 30-year is likely going up, and the S&P is going to work its way back to about 5720 is the number that he has in his mind. How much of an issue is all this?
I think it's an issue. It certainly got everyone's attention, from the chief strategist types to the chief economists. But we front ran, like we ran up into this actual deal, and now yields are flat to lower today. So the big news has already taken place. The 10-year, which is basically unched today, is up 44 basis points for the month of May. It's a very dramatic move. It was at 4.13% on April 30th. So this has been quite a run. 2-year yields up above 5%. Excuse me, there were two yields left above 5% still. Everyone's really watching the 20-year, 5.09. For me, that's the bigger one than the 30. The 30 is the tail that gets wagged by that 20-year tail. And again, it's the highest level that we've seen since October of 2023, when the growth outlook, frankly, was much better than it is today. So it's a very strange situation we find ourselves in. My personal opinion is that the confluence of a slowing economy and the AI impact on the labor market in the second half of this year, which we're already starting to see evidence of, those are disinflationary forces. I understand that the tariffs are inflationary, or at least on the surface could produce supply chain problems that become inflationary. I think the market has to decide which story is more believable, that we're going to have supply chain shocks as far as the eye can see, or that the labor market is cooling, the economy is decelerating, and inflation's not the real risk. My personal opinion, it's the latter. I think the Fed will be doing more rate cuts than people think today, and I think the economic data is trending in that direction. And I can personally look through a 20-year or 30-year north of 5%. For me, that seems like the head fake.
According to Tom Lee, Jim, have firepower, his word, to drive stocks to an all-time high. We're only 5% away on the S&P. You know, before you had the little bit of a tantrum yesterday, right, last week before I went out west, we were talking, well, the S&P is only 4+%, and we're 5% away from a record high in the S&P 500.
So big surprise, Scott. I'm pretty optimistic. I think this was a stock market that was looking for a reason to consolidate, and it got one. But let's parse through what is happening in the bond market. I mean, the 20-year and the 30-year, and Josh, I think you were alluding to this, but you kind of pulled your punch. Who actually buys those? It's the people who buy those are insurance companies, pension funds that have long duration liabilities. I got it. You know what matters far more is the 10-year, because that's what businesses key off of in terms of their capital expenditures. And the 10-year, I'm not going to look right this second. What is it, 4.58%? I'm not freaking out about that. Now, yes, you go up towards 5, there's going to be a hiccup in the markets, unquestionably.
Rate of change, too. We can't always speak about absolute levels. They're almost meaningless.
Scott, I agree. We always have this conversation. I'm not denying what you're saying. I'm not. But what I'm saying is, actually, the 10-year has been kind of stable for a while. It popped up to 4.8 whenever that was, April. Got back down to 4.25. If you really look at it, and I'll give Ed Yardeni credit, he's been calling this, we're just kind of stuck in this 4.25 to 4.75% return. So I'm not looking at that. And I'm also going to say one more thing. Reason I'm optimistic, what you were saying, Joe, about international bond yields, yes, it's because there's borrowing and there's going to be growth from it. There's going to be growth. European defense companies are going to grow on this. So are American defense companies.
I don't believe the story that people are selling U.S. Treasuries to buy German war bonds.
No.
I'm sorry.
No.
I don't. And to your point, Jim, you're absolutely right. We took a look at the 3-year average yield on the 10-year. It's 4.11. We're slightly elevated. We're not at the top of the range. We're right smack in the middle of pretty close to the middle of a fairly defined range. And the highs, again, we're back in 23. So the alarm bells may go off as you reapproach those old highs, but I mean, until then,
in, right? If your point well taken is that we're not necessarily looking to diversify a meaningful portion of Treasury exposure for these institutional buyers. They're looking to buy other things, but a 10-year Treasury coming close to 5%. That looks pretty attractive, especially
I totally agree
rates,
with that.
with rates moving lower in the back half of the year.
I put something on LinkedIn toward the end of 23 as it looked like we were going to, quote unquote, break the 10% ceiling on the 10-year. I said, I will buy as many 10-year treasuries at 5% plus as you could possibly sell me. I'm very, very happy to do that if I think inflation is like 2-ish to 3-ish% going forward, which is actually what ended up. I never got my chance. We didn't get over 5% meaningfully and stay there. I feel the same way today. And in the wealth management channel, I would imagine millions of Americans with a lot of money, they would love that opportunity
and that curve's
to lock that
steepening,
in.
right? I mean, the front end of the curve's coming down.
I think you have to
So-
be careful, though, drawing the correlation between rising yields and the fact that the S&P can't go higher. I think there's an effect on the consumer. I agree with you from higher private sector borrowing costs, but most of the companies in the S&P 500, they don't have the need to borrow.
That's why we asked the question. We didn't make a declarative statement at the top of the program. It's will rising rates wreck stocks, not rising rates are going to, because it's not so cut and dry as you both and everybody here lays out.
So what happened in 22, this is the instructive, 3 years ago. What happened was the threat of rising rates wrecked a very particular part of the market, which was no earnings, SPAC, recent IPO, technology companies without a business plan, and rightfully so.
They were bubbles.
Because all of a sudden, capital has a cost, and people change their behavior when it actually costs them something to invest. The 2-year period leading up to 22, there was no cost to invest because money was free. So what you could end up having is a scenario, Joe lays it out, you could have the general stock market rise as rates rise, and you could say, hey, look, the economy's going to be great. We're going to get this extended tax cut, and that's good enough for everyone else. But it's going to wreck the most speculative areas of the market. It could act as a governor on multiples, even for the S&P. That's
or the
possible.
most levered, to Joe's point. I mean, leverage, you got to look at company level leverage much more closely
Yeah,
in this
small
environment
caps
than
won't
ever.
like small caps won't
And
like
they
it,
don't.
and they don't.
And Scott, if I can just go back to Mr. Capuano, and you know, they shouldn't be surprised. The CEOs should not be surprised that the economy is strong. It's strong because they haven't laid people off. Period. End of story. That's why
But
consumption's hanging
they're
in
human
there.
beings. They look at the data, at least the soft data, the surveys,
Sure.
and say, "Wow, you just did the second worst print in consumer sentiment ever."
Yeah.
But the sentiment is politics. If you
Well, of
look
course,
at you look at a
yes, it
breakdown,
is. The breakdown
Republicans,
is very true.
Democrats, it's nonsense. What they're calling people up who answer a landline phone, and they're saying, "How do you think the economy's going?" And if you're a blue person, it's horrible. And if you're a red person, it's the second coming of Christ. And the independents are saying they're worried about inflation more so than they were. So that's what's changed. But the reality is, don't worry about surveys. I totally agree with this premise. Unless and until you get layoffs in these non-farm payroll reports, and we're not getting them.
You're just not.
There's nothing to talk about.
I'm just telling you, to a person out in Arizona, a room filled with CEOs of big, middle, smaller level companies, it was pretty consistent with pretty good.
Good.
Because everyone's working.
And they're
Yeah.
earning. Those companies are earning. And that's the difference between the environment today and 2022. When rates went from 0 to 2, that was a much bigger impact from rates going to 4 to 4.5, 4 3/4. In 22, you had an earnings recession. Where you are today, you still have consistent earnings growth and profit margin expansion.
Let's address the fact that the Nasdaq's doing best today of the majors. It's up 0.8%. And many of the names within it are doing quite well. Apple really is the outlier today, which is flat. We'll say it's doing nothing, because I think the market is still trying to figure out, as it's been down for 6 consecutive days, the longest streak in more than a year, what the implications are of this OpenAI deal to acquire Johnny Ive's startup for $6.5 basically $1 billion. Most of you know Johnny Ive, the legendary designer, of course, behind most of the iconic products that Apple has, and he left the company some 5 years ago. A comment that Johnny Ive made in the context of all of this did not go unnoticed in Techland, to where he said the following, and I quote, "The products that we are using to deliver and connect us to unimaginable technology, AI, they're decades old, and so it's just common sense to at least think, surely there's something beyond these legacy products.
Talking about
it's
phones.
the legacy products that comment that kind of got everybody's attention, Steve Kovac included. Some saw it as a slight, I guess we should say, on a family network towards Apple. You may have had a little bit of a harder take on that. But what do we make of this? The deal and then the comment.
Yeah, Scott, and I had a little bit more of a colorful reaction to what this means for Apple. But yes, this is a shot across the bow, however you want to put it, at Apple, because Johnny Ive was kind of that heart and soul of Apple with the design chops and that artistry that has since kind of left Apple, because when he left nearly 6 years ago, he brought along the best designers with him, and they are now working on this project. And let me just tell you the latest now, Scott, that we're hearing about what this mystery OpenAI artificial intelligence gadget is that Johnny Ive says is going to take on these legacy gadgets, by the way, that he helped invent. Ming-Chin Kuo, he's that analyst I talk about so often. He's always right. He's deep in the supply chains. He says this is going to look kind of like an iPod Shuffle. If you remember from 20 years ago, you wore it around your neck with a lanyard. He says it's going to be kind of that form factor. It's going to have some cameras and microphones for always listening with the artificial intelligence. It'll pair with your phone, and not expecting this to go into full production until 2027. Now, OpenAI says we're going to see it next year. They're going to finally show us what they're working on. But as we think about what this means for Apple, Johnny Ive also said, as he's knocking down these legacy products, he also says he's created it. They've cracked whatever code they think needs to be cracked to make an artificial intelligence hardware device that is going to basically rival the iPhone. And that is not something small. So I see kind of two ways here, Scott. One, they live up to the expectations. What they show us next year is just going to blow our minds the same way the iPhone did back in 2007. Or this is a huge whiff, and it looks like a $6.5 billion blunder for OpenAI and really damaging to Johnny Ive's legacy. So they're putting enormous pressure on themselves to deliver something they say Apple can't even deliver, and that's why Johnny Ive is doing this with OpenAI instead. So that's something to really chew on as you talk about what this means for Apple, Scott.
All right, yeah, great setup. Steve, thank you. Steve Kovac. What do you think?
No. What is it? It's shaped like an iPod Shuffle.
It's like a Nano. Remember those little
The
ones?
Nano. So yeah, I used to send my kids up to camp with them, and they would get taken away. Shout out to Tyler Hill. So nobody wants that. Here's the reality. The reason why the iPod Shuffle went away is because the phone was a better music player, and you were definitely not leaving your house without the phone. I think the better bet is that glasses will be the form factor. Meta's got a version. Alphabet just talked a lot about that form factor. I think AI is coming to the face faster than it's coming to your pocket in the form of another device that you have to carry around.
Totally agree.
Look, I'm not Johnny Ive, okay? I understand my limitations when it comes to discussing tech hardware, but I would not be a seller of Apple because you think that people want to carry around an OpenAI keychain so they can do an AI search of how do I make the best chicken franchise. It's not realistic to me.
I want to move to one of the better performing techs today. It's a good derivative out of the Apple conversation in many respects, because it was a conversation that Eddie Q of Apple was having, I believe in a courtroom a couple of weeks back, that sent Alphabet shares sharply lower. The fact that searches on Apple's browser had gone down for the first time ever. The stock cratered off of that. Many on this desk, not necessarily on this desk today, but generally speaking, including yours truly, talked about that as a very significant moment. Those we talked to, like Kovac and other experts, suggested the same, that it wasn't to be so easily dismissed because of the growth of generative AI and the impact that it would have on market share for search, in which Google's the GOAT. Jim Lebenthal that day said, I'm not doing anything. You're overreacting. The stock is overreacting, and I am sitting tight. I've seen this movie before. I'm not going anywhere. Mr. I Didn't Go Anywhere has seen shares up 15% since the Eddie Q sell-off. That's what we're calling it. You stuck with it, and it paid to do so.
Yeah, where's Kovac? Let's get him back on. He piled up too. No, I love Steve.
Guilty as charged, Your Honor.
No, it could have gone badly. I acknowledge that, but the thesis
It's not over yet either.
And it's not over yet. Acknowledge. But here's what the investment thesis is. This is Alphabet, for crying out loud. All right, this is not a fly-by-night company. This is a company with tremendous resources, tremendous intellectual firepower. Obviously, this was and is, Scott, a challenge. They have the resources with which to meet the challenge. They are a great company. That's what great companies do, is they meet challenges. And the other half of this, and the reason I wasn't too quick to, knee-jerk my way out of it, is that the price of the shares at roughly 17 times forward earnings, in my opinion, purely subjective, have priced in far more downside than is likely. At the time, I said they've gone through some trials before and met the challenge, and I think they will continue to do so from here.
Any other comment on that?
Congratulations, Jimmy. Good call. I still perceive it to be a problem
Jimmy
for this
came
company.
in today. He was hoping that he'd
Yeah, he had a bounce in his step. He should have a bounce in his
He did.
step.
Can I ask a question? So, are you less concerned about the search deterioration, or are you more optimistic about YouTube and Cloud? Because I think that those are two sides of the coin.
I'm excited about Alphabet putting its resources to work to meet the challenge. And we've seen things like this happen plenty of times before. I mean, this is an inexact comparison, but when Meta faced that issue with Apple's iOS, where people were going to have to opt in to get customized ads going to them, people were saying this is a death knell. And they met the challenge. It's not the same analogy, but there was a similar
death knell is too
issue.
much. I think this is.
Can I say one thing before you go?
Yeah,
Just
please,
one thing. All
please.
right. This is because you and I talked about this.
Yeah.
Is this a value tech stock?
It is.
And I'm gonna tell you no. I'm gonna say this is better than value, better than growth at a reasonable price. This is growth at a superior price.
Okay, I don't disagree at all.
Yes.
You got a stock that rallied right up into its 200-day, so we'll see how she handles that challenge. The other thing is they had a fantastic event this week, and some of the things that they came out with were things that the tech press was not even looking for. And I think they surprised some people to the upside in terms of the way they're thinking about AI as an opportunity, not as a threat. So kudos to them and to shareholders.
Citi agrees with you, by the way, which says after the event, stock's going to 200.
I hope it does. I would just say, and here's your issue that is yet to be determined, and it's way too early for anyone to say one way or the other. You got a $360 billion revenue business. $200 billion of that is Google search. It's clear that Google search can remain a hugely profitable cash cow. They've got other great businesses too, like web hosting and YouTube. We all agree with that. The thing is, they've been able to grow earnings over the last 5 years, but the multiple has shrunk almost every year by at least 1 point per year. Do we think 17 is where it stops? That's what I worry about with the stock, which is why I call it value tech.
As you say that, what comes to mind is, remember when Apple 10 years ago traded at like at 11, 12, 13 times?
Right, ex-cash.
I mean, certainly it can go down to that, but I mean, where's Apple today? I'm not going to look, 26 times forward earnings?
So tech is the best sector this month. It's up 10%. We know about how hard it's rallied back. Discretionary is up 8.5%. Now, Tesla is part of that. Stocks had a big move back. We have a couple of IPOs, by the way, here today, and that bell tells me that another one has opened for business. Which of the two is this?
MNTN.
It's MNTN, because Hinge Health is also here at the New York Stock Exchange today. So there it is, big pop off the open. We'll continue. We're back. Josh Brown has a new stock in his best stocks in the market, and it is what? Please tell us.
Yeah, that's right, Scott. We're going to talk about EQT today, which is in the energy patch. This is a sector that's been left for dead amidst the spring rally. The XLE just cannot get going. Only 35% of the components in the XLE are above their 50-day, only 30% above the 200-day. It's really been a drought, but there are 4 names on my best stocks list from the energy sector. I thought it'd be fun to take a look at where the strength there is in case that sector plays catch up. EQT, EXE, which is Expand Energy, WMB, Williams, and KMI, those latter two, they're a little bit more dividend-oriented former MLP names. Let's look at EQT. This is the best of the bunch, 21% year-to-date return, really stands out here. It's the second best energy stock on the year, 35th best S&P 500 stock overall. What's going on? This is the second highest expected earnings per share growth of all the energy names, 110% EPS growth expected. Take a look at this chart. You got a relative strength of 60, not overbought, but certainly confirming those levels. We're 3% below the 52-week highs, 7% above the 50-day, 25% above the 200. That $50 to $52 level had been resistance up until it broke through. Now it should be support. I like the risk reward here. Play off that $50 level with your stop, and I think she can keep going. You want to be long this name so long as it stays above that rising 200-day. This one looks great to me.
Final trades. Jim, Farmer Jim. Feeling great today, came in with that bounce in his step. Was looking for some love from the judge. He said, I'm tired of taking all that heat. Did I deliver for you?
Yes, Your Honor. Thank you. I'm quite honored as well. Delta Airlines, Judge, I was going to bring this up when Don was talking about discretionary. Look, for all of us who are waiting for the recession, you know, Mr. Capuano and everything, it just isn't appearing. We've got low jobless claims. People are flying. Estimates are going to start going back up.
All right, Shan.
Energy sector, a lot of negative news priced in here, pretty undervalued. E&P integrateds probably are where you should be looking in this space.
Joe T.
Best consumer discretionary name that we own right now is Mercado Libre.
Okay, and Josh Brown.
TOST.
Thank you.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It is Thursday, May 22nd, 5:33 p.m. as I am recording this video. And it's after the close, and we just saw a few clips from CNBC halftime report. Josh Brown was on there, a few other guests, and they shared some of their stock picks. You can see the list right there. Those 4 stocks were the final trades. So we're going to analyze those stocks. We're going to use the Ichimoku indicator to help us identify the strength of each of those stocks. And a couple of other things we'll be covering as well is the indices here, the Dow, the Russell 2000, the Euro stocks. We'll also take a look at the Mag 7 stocks in this video. Very important to look at those. And then, of course, we'll take a look at some of the strongest sectors. So before we get started, let's take a look at the markets. And before you guys, before you forget, don't forget to hit that subscribe button. If you're new to the channel, or maybe you haven't hit the subscribe button yet, it would really be helping the channel. And then don't forget to hit that notification bell as well. All right, so let's go ahead and get started here. You can see the Dow Jones, right? Down, actually it wasn't down, it was at 0%. So it moved up and then it dropped, as you can see here, and closed at the prior day's closing price, which is interesting. The Nasdaq up 0.28%, just slightly up for the day. S&P 500 slightly down 0.04. And look at the Russell, also 0%. It's very rare to see 2 of the indices hit that 0% level. So what does that mean to me? Like, it means there's a lot of indecision here going into tomorrow. It's unknown what's going to happen. Now, we've had a few days of down days in the market, so I wouldn't be surprised to see the market actually go up slightly tomorrow. But that's just a theory of mine. Whenever I see indecision, and this is basically, it creates what's called a reversal type candle. So how about the heat map? Let's look at that. So the majority of the Mag 7 stocks were up, like Microsoft here, Nvidia, Google, Amazon, Tesla. Apple was down 0.36%. A lot of the semiconductor stocks were actually down, except for Broadcom and Nvidia. And the healthcare stocks, you can see the healthcare plans, like UNH was down. Let's see, utilities were down today. And everything else was pretty mixed. Okay, consumer defense was mostly down. Let's take a look at that sector rotation that's taking place here. All right, so today it was the consumer cyclical, technology, and communication services that were the top 3 performers. And you have utilities, healthcare, consumer defensives down mostly. There's the 1 week performance as well. Okay, so let's take a look next at, we're going to go into the indices, and then we'll take a look at those stocks talked about on the halftime report. So start off with the Dow Jones. Let's look at this daily time frame. So where is it at? It's basically under the 200-day moving average. That's not a good place to be. It's under the Tenkan-sen. The Tenkan-sen is the green line, or conversion line as they call it. It's the 9 period. It takes the last 9 periods, the midpoint of the last 9 candles, right? Specifically in this case, 9 days. And it basically plots it right there. And the red line is the Kijinsen or baseline, and that's the 26 period. And then we've got the Ichimoku cloud. So basically what we want to see essentially is price above the moving averages, above the Ichimoku cloud. And we also want one more thing. This white line that you see in the background there, that's the closing price. That's today's closing price, but it's projected 26 periods into the past. All right. And when you see that white line above the candle below it, that's actually bullish. If it happened to be under, like it was here in the past, that was quite bearish, right? And then you can see that decline that was happening. So not all of the elements here are giving us a buy signal. And then also we have the future cloud as well. So the Senkou span A right here is bullish. That's the lighter colored blue line that you see right there in the Senkou span B. This right here, this line is derived by taking the midpoint of the 9 period and the 26 period. It's the midpoint. And that is projected 26 periods into the future. And then the Kijinsen, the red line, I'm sorry, the purple line that you see right here, I called it Kijinsen, the Senkou span B, sorry, is actually the midpoint, okay, of the last 52 periods price, but it's projected 26 periods into the future. So it's a very unique indicator that was, created in Japan, incepted in the late 1930s and then published in the late 1960s. And it's used a lot by many financial institutions today. It really does help. And the idea behind it is the Ichimoku in Japanese stands for at a glance. So at a glance, what we want to look for is to see how strong is the trend that we're currently in. Right now, I'd say it's not a very strong trend, but it's on the daily time frame, there are more positives than negatives taking place right here. So you can see that also if we look at a traditional technical analysis, we've got a higher low. I'll show you that right here, right there from the prior one. And we also took out this high here. So we've got a series of higher highs and higher lows. So that is good. But yeah, I'd like to see it get back above these areas. Obviously, it got stalled at that prior high, and now it is declining. So we'll see if this is a short-lived situation. Maybe it will come down to the top of the cloud. A lot of times price will find some support there. All right, how about the FEZ? FEZ is the Eurostoxx 50, still very strong as far as the trend goes. Now this is what you want to look for. You want to see basically price being, there's price. You want to see that above the moving averages, above the cloud. The Chikou span is above price, and we have a bullish cloud. So everything here looks very bullish, but it was down 0.05% today. Russell 2000, okay, coming down and finding some support right there at the cloud, but it's under the moving averages. It's also under the 200-day, so it's not as strong, obviously. And we also have a series of lower highs and lower lows. You can see that this low, for example, is lower than the prior one. And right now, we were unsuccessful in breaking through that 209 level right there that you see, that prior high. So basically, there's nothing to do here except for to basically sit on your hands and wait, in my opinion, especially since the 200-day is lurking right there above. And that's a very strong level of resistance. Once price is underneath, we want to see it break through that level like it did, for example, back over here, and it led to that nice move, right? When price gets under the 200-day, it typically drops. All right, so that's very, very normal in that it's a sort of a quick way to assess the situation. Of course, when price is under the Ichimoku cloud, that's the same situation, right? Where it shows weakness and under the moving averages. Here's the Russell 2000. The last time it made sense to be in this ETF from a technical perspective using the Ichimoku was actually all the way back here on December 4th of 2024. Once it broke through and closed under that 9 period, the green line, which happened right there, I want you to notice how price stayed under, dropped under the cloud, came back, found resistance at the cloud, found resistance again, and again, dropped some more. It moved up a little bit, found resistance at the Kijinsen and dropped some more. And now it's moving up. It broke through the Ichimoku cloud. That's a good sign that it broke through. However, we still have resistance above. All right. And this prior high here is really important too. It needs to break that 209.27. All right. Here's the QQQ ETF. Now this one looks a little bit stronger, obviously, because we did break, in fact, above a prior high. Right, that high right there was broken. And so now it is actually still above the Tenkan-sen, the green line. That's good. It's still moving up. It's only up 0.19% today. All right. Now on the weekly chart, by the way, we're looking at a daily time frame. Remember, if personally, I like to look at both the time frames before making a decision of adding a position or closing a position. I look at the weekly chart too, and right now the weekly has been showing some strength, but you'll notice that the faster moving average here, the Tenkan-sen, is still under the Kijun-sen. All right. All the other elements are, and the cloud itself is bearish. So when you see, for example, the Senkou Span A, that lighter colored blue line there, getting under the purple, that's bearish. That's a bearish future cloud that's forming. All right. Now we had reached this level here in the past, the 540.81. That's the prior high. The question is, we're getting close to it now. We're not that far away. We developed a reversal type candle here, guys. This is a doji. It's an indecision. It's kind of neutral, but if it happens at the top of a move, it tends to be more negative. And let me just show you what it looks like real quick. Here it is, doji. Okay, so it's like it looks like a little cross basically. And the opening and closing price basically take place at the same place, and that's the body of the candle. And so what that tells us that no one's in control here, really, neither the buyers nor sellers. But when it happens after a move up, it also, it basically signifies, this is a weekly chart, by the way, it signifies that there's a potential for a turn to the downside. Let's look at the S&P 500 on the daily time frame. Today, it was up just 0.04%. It actually gapped down a little bit in the morning, and then it moved up, but and closed slightly above the prior day's closing price. But it's still under Tenkan-sen. I would not be entering a long position here. It does look relatively strong as far as breaking that prior high right there, and we might get a bounce here tomorrow or the next day. We'll see. The VIX is currently, it was down 2.83% today. That's good, but it's still holding above that conversion line, the Tenkan-sen, and the 200-day. That happened yesterday where it broke above. That's not good. We want to see the VIX dropping. And the other thing that's kind of concerning about the VIX, you'll notice that the positive DI9 is above the negative DI9, so that's negative. Okay, we don't want to see the VIX moving up. It represents fear, essentially, in the markets. CNBC, these are the 4 stocks they talked about, and then we'll go into the Max 7. So let's take a look at MELI. That's Mercado Libre. That was Joe Terranova's final trade today. Now, this has been on a run since it broke through the Ichimoku cloud back here on April 15th. It's moved up about 23%. So, it had a little pullback here, popped back above, and is continuing. It's a little bit extended at this point. I don't know if I'd be looking to jump into this right here at this moment. Let's look at the weekly chart. Even on the weekly chart, it's kind of extended. You can see how the distance, right? The distance from the Tenkan-sen and Kijun-sen is quite vast. If we were hypothetically to come back to retest these moving averages, the drop would be about a 19% drop just to reach that Tenkan-sen. So I don't know if I'd be jumping into this right here. At this point, it's a little bit kind of already ahead of itself. DAL, Delta Airlines, this one's inside the cloud. Now, one of the rules of Ichimoku is you don't want to add a position or go long when price is inside the cloud or under the cloud. Here's Delta Airlines. Like I said before, we can see the weakness that took place right there where price got under the Tenkan-sen, and notice how price remained under all this time. In fact, it dropped from that point right there, which is, let's see, the date was February 10th, 2025. It dropped as low as 47.5% in 1.7 months. Now, it has moved up a little bit. The decline now is just a 26% drop and has moved up. However, it's still not in bullish territory yet. So under the 200-day inside the cloud, I'd stay out of that one. IYE was Shannon's final trade on the show. So you can see here on the daily time frame, we have experienced a lower low from the prior low, and a lower high here from the prior high. So that's not really that great. It has moved up a little bit since then, right? So you can see this little short little move up. But this could also potentially be a bear flag, is what I call it. So if you see a big drop like this, right, and then you see a small little incline taking place, all right, it moves up and you create a higher little low here, and a higher high from the prior high and a higher low here from the prior one. But it's not that much of a move. That tends to be more of a bearish flag. I'll show you guys what that pattern looks like right here. So a bear flag. Let's zoom in on that one a little bit here. There we go. So you'll see it dropping. Whoa, hold on. You'll see price dropping, okay, and then start to move up, just like that. The problem is that a lot of times this is just a very, very short-lived false move, and it's, this is the bearish variant, and so if price gets under that trend line, I think there's going to be a continuation to the downside. Now, what happened here is in fact that, okay? So if I draw a trend line from that point to this low, notice how it closed under, okay? So I'll just throw the permanent, there we go. Let's throw that on there, and let's make that parallel, create a parallel line, throw that on the top. I'd say maybe around that level there. So you can see that price moved up, and now it's closing under. It's under the Ichimoku cloud. You've got a bearish directional movement index right here. Negative DI has crossed above the positive DI, and the ADX seems to be moving up a little bit, doesn't it? You see that little slight incline. That means that momentum is coming in. So we'll see what happens. It was down 0.53%, so I wouldn't be jumping into energy right now, or this specific ETF, okay? There might be some strong stocks within it. If you're using TC2000, what I use here, you can find the component list of what's inside this ETF by clicking on this right here. Right next to the ticker symbol, this thing pops up. It says Open Component Watch List of IYE. Boom. So here's a number of the stocks. Now I can go through some of these and just kind of, I don't know, let's take a look at some of those real quick, just for fun. All right, we'll look at AM. Oh, that happens to be a stock that I had and closed out of. APA, AR. Okay. Some of the stocks that are in there. The majority of them look like pretty negative, actually, don't they? They're all under the cloud. CVX. So, yeah, not something I'd be interested in as a sector, the energy. TOST is that was Josh Brown's final trade. Now, this one does look pretty bullish as far as breaking through that 44.12. That happened right here on May 14th. We talked about that, I think, in a prior show, another video that I did. Now, since then, it's pulled back a little bit, and that's okay. It's totally natural and normal for price to, once it breaks through, sometimes it needs a little breather. So right now, it's pulled back a little bit, but it's very likely now. We've got a reversal candle. We've got a spinning top. For this, if it breaks through and the Tenkan and the 44.12, that's going to give us a new buy signal, basically. All right. And I like the fact that it did develop a doji here. Here's a weekly chart. So you can see that on the weekly chart last week on Friday, May 16th, we broke through that prior high. Right now we're under it. Will it be a short-lived situation? We don't know until Friday, right? Tomorrow we'll have a better sense of where this is going to end up. Will we get back above the Tenkan, or will we continue to the downside? If we do continue to the downside and it breaks under that low of that candle, expect it to drop maybe another 8% or so down to the next level of support, which is the Kijun, the red line. Let's take a look at the Mag 7. Here's Microsoft still holding up above the moving averages, above the Ichimoku cloud, but stalling at these resistance levels here. So it was up 0.51%. NVIDIA is looking strong on the daily time frame. It broke through this diagonal trend line there, and it seems to be finding support there. It's still above the 200. You can see that we broke through the 200 on high volume on May 13th. And it also broke through that trend line. So now it's continuing to move up. We'll see if that can continue. Here's the 2-hour time frame, showing a little weakness today, though, because it's pretty flat, if you think about it, right? It hasn't really moved. We've been consolidating here for a bit. So I'd want to wait to see what happens here. I would not be jumping in until price either breaks above here. If it breaks under, that's probably, going to see some continued weakness probably. Google dropping. Here's a 2-hour. Let's look at the daily time frame actually. So this is interesting. It popped here 1.37%. It actually pierced the Ichimoku cloud, but finally closed back inside the cloud and then basically sitting on the 200. So what would I be doing? This is a reversal candle. This is called a shooting star right here. This little candle right there. That's called a shooting star, guys. That's an important one to memorize. It's a reversal, so it could potentially drop tomorrow. Let me show you what that looks like real quick. And there it is. So after a move up, you get that long wick, small little red body, price drops typically. Not always. If it can break back above the high of that candle, the high of that wick, then you should see a continuation. I do like the fact that there's higher volume coming in here. More buying, more interest after the positive news yesterday that I talked about in the prior video. So, yeah, it's looking pretty good for Google. But this is concerning. All right, so this is not a buy signal quite yet on the daily time frame. If you're trading a shorter time frame like the 2-hour, we have already established an uptrend here on Google when it broke through the cloud here on the 2-hour on Wednesday, May 14th at 12 p.m. And since that point, it's moved up about 3%. Just understand that if you're going to use the 2-hour time frame to make your decisions, you have to really pay attention to it. It can be a lot more erratic. You're going to have more signals, buy and sell signals. With the daily time frame, not as many. Okay. Tesla is up 1.92%, holding up above the Tenkan and Kijun on the daily time frame. We've got a bullish cloud here as you can see, and on the weekly chart, though, something I want to mention is that it is still stalling at the Kijun. So last week, price closed right there at the red line. The red line is basically, let's see, we can look at when I hold my cursor right there. There's a little box that populates on the left-hand side, and you'll see that it says baseline. That's the Kijun. That's 351.39. We are currently under that level. We're at 340.104. All right, and so I would hold off on Tesla. Amazon, plus I don't particularly like the company right now. Amazon. Amazon on the weekly chart is above the Kijun. It's above the Kijun, and you can see Tenkan is under the Kijun too. So it's showing some strength, okay? But when you have on the weekly chart the faster moving average under the slower one, I wouldn't be jumping into this quite yet. It's not quite ready for the big leagues yet. Here's a daily time frame. We're just barely breaking through the Ichimoku cloud right there once again after it closed inside yesterday, holding above the 200, but it's still under the Tenkan. It's kind of trying to set up on the daily time frame. But let's look at this on the 2-hour as well. Notice what's going on. See how it's kind of stalling here, and it's been declining, and it's holding inside the cloud on the 2-hour. So yeah, I would hold off on this one. Apple on the 2-hour is under the Ichimoku cloud. On the daily time frame, it's inside, and on the weekly chart, it's inside. So there's nothing to do with that. Meta, we've got price above the moving averages and the cloud, but Tenkan, get rid of some of these lines. We don't way too many lines, guys. All right, we don't need all these trend lines. Okay, this is probably I would probably use this one right here. That prior low, the high of that candle is 633.88. All right, and let's circle it So we know exactly where that trend line comes from. Notice how it also coincides with this over here, this little level. Oh, wow, right there too. So there's multiple, that's an interesting little spot right there, that 633.88. It's holding up above it. It's kind of stalling though. So I'd hold off on that. Here's a 2-hour time frame. You can see it's pulled back. There's indecision happening here. Like they said on the show, the markets right now, the majority of the stocks are just kind of going sideways. They don't really know which way to go. So when there's indecision, it's probably best to just hold off for a little bit to see what happens. And then as far as the strongest sectors right now, these are it. GDX, gold miner, ETFs, they were down today. Here's the daily chart. Let me show you. Down 0.53%. But remember that trend line that I drew yesterday, and I mentioned that this is more of a bull flag. So this is the opposite of the other type of. This is the complete opposite of the other pattern that I mentioned, right? So let me show you a bull flag, what that looks like. So earlier I showed you the bearish flag variant, right? The drop and that small little uptick. As you can see, that higher high, higher low right there. This is the bullish variant. After a move up, we see it declining. And you would think that that might be very negative, but sometimes it can have the, it's just basically a short little pullback, all right? And then you're looking for that new buy signal. This is the ideal type of, you hear about, buying the dip. This is it. This is the dip right here. But you only want to buy dips when price is above the moving averages, above the cloud, okay? And so like right now, we're experiencing that dip. Now, if price breaks through, and it did on GDX, it happened 2 days ago. So let me show you. So there's that trend line, and it broke right above that. That happened yesterday, on Wednesday. And then here we are today on Thursday, and it's holding up above it. So I think there's a good chance that we're going to see it move up, even though it was down 0.53% today. Let's take a look at XLI. XLI is under the moving averages. It's finding resistance here at these levels, 144.51, that prior level there, and it pulled back, and it's under the Tenkan-sen. So not a time to be adding a position. Overall, I like the pattern here. I'm sorry, the Ichimoku, the way it looks, but price is under Tenkan-sen, so you have to wait. And Bitcoin is at $111,379. Can you believe it, guys? It broke through that 109,286 level that I drew not that long ago. And when did I throw that on there? It was on May 21st. I added that. So yesterday. And it was based on this high right here. Okay, Monday, January 20th from 2025. So we're above those levels right now, and Bitcoin's off to the races, basically. Let's take a look at IBIT, which is also the Bitcoin Trust ETF. So there it is, popping up 2.33% today. When there's indecision in the markets and people don't know where to invest, this is another place to put money, I suppose. And there are more and more people adding at least a small percentage of their portfolio into Bitcoin just as a insurance policy. You never know. U.S. dollar has been dropping quite a bit. It is I suppose, an asset class that can't be manipulated by governments, which is good, right? So that's part of the, I think, attraction to it. All right, let's look at XLC. Communication services broke through that level right there, that prior high of $100.21, and it's holding up above it still. But we've got a series of reversal candles here. But until it breaks under that 121 and the Tenkan-sen, I wouldn't be too concerned. I think it's just taking a breather here. Sideways action, right? What about, we already talked about that. How about GLD? GLD is currently, I think, also developing this like bullish flag type pattern, with a series of lower highs, lower lows here after the move up. So I think there's a good chance here that gold will also follow the direction of GDX since they're so closely aligned, right? The gold mining is GDX, and this is going to be first in line to like show us like maybe this is a little preemptive idea of like where the gold is going to be going, where gold price is going. Now, it was down 0.89% today, though. And then finally, that's it. Actually, no, that's the only one. So that's going to do it for this video. Guys, if you like what you just saw, don't forget to hit the like, subscribe button. And one more thing. I also create other videos that I don't show here on YouTube unless you are a member. So you can access those member-only videos that you see right here. So once you're on my Blue Cloud Trading page right here, this is a series of multiple videos that I've produced over time, including some day trading videos too for Blue Cloud Legend level members. And the last video I did was about 5 days ago. As you can see right here, that was for the week ending May 16th. I go over my entire portfolio in these videos. I share, why I'm adding positions, why I'm closing positions, and in the video itself. And then once you become a member, to become a member, to access these, all you need to do is click on right next to the subscribe button. Remember, subscribing is free. But if you click the join button, that's what you'd want to do. Click on join. It pops up this screen. You can become a supporter of my channel by becoming a Blue Cloud supporter. You click on that. You can request a stock to be analyzed in the show. Blue Cloud trader level, okay, is the next level up. You can request up to 2 stocks. And this is where you start getting access to those exclusive member-only videos, right, under Blue Cloud Trader. And then Blue Cloud Legend level is the next tier up. Now, there's more things that you get here. You get 3 stocks or ETFs be analyzed each week on the show. Day trading videos that I talked about that are recorded that you can view for those of you interested in learning about day trading. Daily trade updates posted under, it's not posted in the community tab, it's posted under posts, but it will show up once you become a member. This is what it's going to look like. It's going to show up as membership. And so you click on that and you can see the daily trades that I place, Like today, for example, I added some positions and it closed out of some positions, and I share that with Legend level members. So think about becoming a member and supporting the channel that way. And thanks for watching. We'll catch you all in the next one.